Hi, it's Brian Decker with your Market Minute. Want to talk to you about inflation-adjusted bonds, or I bonds. These are issued to any U.S. citizen, and right now they are earning a fat yield of 9.6%. They've been around since 1999, but at the current rate of 9.6%, that's locked in for 6 months. The limit is $10,000, so that's $481 in interest in 6 months. That's not bad considering that the 1-year CD rate is less than 2%. And also the banks are paying almost nothing on your on the money markets. But it's important to know that the Series I bonds are going to change their yield in October when inflation is readjusted. That's why you want to lock in that 9.6% yield pretty soon if you're interested. The biggest catch is you're limited to $10,000 per person per year. So a husband and wife, they can have $20,000, and then January 1 of next year, you can do another $20,000. So there's a few other rules to these I bonds. You can buy I bonds with as little as $25 and as much as $10,000. And the I bonds are tax friendly. So you don't owe taxes on interest until you sell the bonds. And the interest is exempt from state and local taxes. So if you're in a high tax state like New York, New Jersey, California, then you're able to have that interest be tax exempt. Lastly, most importantly, the minimum holding period is a year. And then after a year, you can cash your I bonds out at any time. But if you cash them out before 5 years, you lose the previous 3 months of interest, which is not bad. 3 months of interest with a 5-year hold. I bonds are best to grow essentially risk-free. They beat inflation today. They're above the CPI, the Consumer Price Index. And the way you get them is you go to treasurydirect.gov. treasurydirect.gov. The website will walk you through the steps to get started. We can't do this for you, but that's something you can do yourself. Fair warning, this is a government website, so there's minor annoyances when you go in there, but this is something to consider for your emergency cash.